This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil, and I'm going to give you a stock market update today as of the close on Thursday for Friday morning. So let's go ahead and get into this. This is a pretty interesting time right now. We're at a really critical point, and the plot is starting to thicken a little bit. So I'm going to go through, as I always do, I'm going to go through the trend and momentum in a minute. But let's start from the bottom up here with the sentiment. It did get more bullish. We have 49% bulls, and the difference between the bulls and the bears is at 23%. It's still not at a level that I would consider to be negative yet. I'd like to see the bulls get up into the mid 50s, low to mid 50s, something like that. And with the way the market's acting, I don't know, it's taking it really slow. We're not getting any big jump in the bulls at any one week or anything like that. So they're turning bullish grudgingly, and so we're going to need to see a switch before we get a really good signal. Now, the overbought oversold actually dropped down below the overbought reading, but I'm still putting it at negative because this is the first week after rotating down from an overbought condition. Now, let's take a quick look at the volatility because this is starting to get a little bit more interesting. So the daily chart is now above the line, the moving average, the average true range, right, of the 18 MA, and so it goes to neutral. Now, if this line turns up, then we're going to have that turn negative. And so one of the things that I wanted to point out is that we got some selling to take place here, but it's not. So what we're going to need to see is a move up like this, and it'll be a precursor to a drop in the market. So a lot of times we get a couple bad days. So maybe we get follow through on Friday or something like that. And then, this line turns up, and then we get a rally back and the volatility stays up, and we get a test and it turns up. And so we get a reversal here, but the market really hasn't done anything. So it's almost like this is going to give us a warning flare before the market really gets hit. Most of the time. I mean, every now and again it'll happen right at the same time. But in most cases, we're going to get a drop and at least an increase in volatility first. If we look at the peak on the weekly, so this is the weekly version of this, we peaked out well in advance, and this started to go up, and the volatility started to go up well in advance. We actually went to a whole new high before it turned down, and that probably happens more often than this lagging. It'll usually lead rather than lag. So right now, it's just not given any kind of real signals on a big picture basis that we should be ready for a big drop. In the short term, the volatility is starting to increase, and that could increase odds that we have some kind of a pullback coming. So we got to be on guard for that. So that covers those two areas, the volatility, the sentiment, and the overbought oversold as well. And let's go ahead and get into the individual time frames. And there is nothing more important than what's going on right here. I love it when I hear people say, sometimes I'm on your Daily 5, I'll do that show, and I'll hear from someone and they'll say, like, I don't see any way that you can make any money as a trader looking at an 18-month moving average. I love that. I love it. And you guys should too, because it's a huge advantage for people who aren't using it, right? I mean, in other words, if we don't want everyone using this, we want them thinking we're out of our minds. You always want to have a little bit of a contrarian attitude when you're trading. And you don't want everyone to agree with what you're thinking. So we've come back up. Look at what happened the last time we hit this line. Well, we're doing it again. Now, we're not repelling it to any significant degree yet. But we have to be aware of it. And the reason is there's a couple things. Number one, one thing I want to point out in terms of why I'm not thinking we're going to get blown away to the downside. At least I think it would be a big surprise. Red DI hasn't been able to exceed 25. Okay, now I'm going to go back in time because I want you to see what this looked like on this drop in 2008. You see this decline and this rally back to the 18-month? So the price pattern looks the same, but look at the difference in the DI. You see how this already broke out and crossed over? I mean, look at what's going on here. We just don't have that taking place now. I mean, that's one thing that has me of the opinion that the likelihood is we might not go to a new low and we might not go to a new high. Now, let me tell you why I'm thinking what I'm thinking. Every time I look at if I go and look at these 4 time frames, I want to try and find what time frame is in control. What time frame do I have the best trending ability? And if you look at these 4 before I say, I want you to come up with what you think, which time frame has the best potential trade setup. Okay? And just look at it. And which one would you say that is? And for me, it would be the daily chart on the long side, okay? And it's not a good trade. I mean, this only got up to, the ADX only got up to 26, okay? We have a move up that marginally broke out here, but we have rising moving averages and we're pulling back. And we did get the ADX to at least cross above 25. The volume pattern's decent. MACD did confirm. So I could view this as a pullback to a rising moving average. Is there any other time frame where I have that going on? I mean, definitely, we don't even want to think about this. This is a trigger time frame, not a trade time frame. We have a rising 18 here, but it's up 3 of the last 4 or 5 weeks in a row. It needs a pullback. And look at the MACD. The MACD is not trending and DI isn't even above 25. We don't have anything here. If this is a reversal pattern, we need to get this above. That's kind of like the minimum criteria, and we really want MACD to get above as well. So we don't have a trade on this time frame. I don't have a trade on this time frame. Now, you could be arguing that this is the best trade, this rally up to a declining 18-month. But if we were going to short this, if we were looking at this like a stock, and let's say this was happening on a daily chart and we get a sell-off and a rally, if we don't have any ADX strength to the downside, are we really wanting to play this? I don't think so. I mean, I'm not thinking this is going to go to a new low looking at this. Look, what I try and do, if I'm looking at a longer term time frame, I want to look at it like it's a daily chart and say, okay, what would I think if this were a daily chart? Well, looking at this, I just don't see any strength to the downside. We don't have enough strength to suggest that this is going to fail and get pummeled down to a new low. I mean, I'm not saying it can't happen. I'm just saying that I wouldn't take the trade for that. Now, the one compelling thing about this pattern is we have a decline and a rally back to a declining 18-month, and we have an ABC rally with no strength whatsoever and a zero-line reversal, potentially, right? But if it's going to play out, then we're going to have to take out this trend line. Everyone see that? This is the 2 time frame trade, monthly rallying up to the 18-month, and the weekly would have to break the trend line in the situation that it's in without going any stronger to the upside. Because the stronger we go, if we get these 2 lines above, then we have to look for something more complex as a reversal. Right now, we have a very weak rally, so we should be on the lookout for a trend line break here. I think it's a little bit aggressive. Now, part of the reason why I say that is that this has exceeded above 25. And this is still pretty weak, but it has exceeded 25 level. So probably going to do some kind of complex pattern before we break the trend line. So one thing we could be on the lookout for, and let's just clear this off so you can see what I think could happen, is we could, and I'm giving you the downside one first, all right? So this is a downside scenario. We break here, and then we rally up in this, and in the process of doing this, the ATR rises, and we get risk to show up on that average true range is going up above its moving average, okay? So that's one scenario, the way this breaks down and fails, and then we get some kind of a lower high here. It would be a negative, it would be an opposing trend trigger on the hourly, preferably with some ADX showing negative connotations there. All taking place while this is still in the process of reversing, but we're seeing a signal on the lower time frame starting to develop. And that would probably take place prior to breaking the trend line. If that takes place, then the trend line break would be pretty valuable, I think. So this is how I'm kind of watching this. I don't want to make a market call. I just want to do really good analysis right now. What I don't like is we've made a move to the upside. We kind of failed and got back below. I think we're back below the 40. We're back below 4,100, which was this breakout level. Don't really like that. And we never really got the ADX. I like to get it at least up to 30. I know it got to above 25, but that's pretty weak. That's really pretty weak. With that said, I don't see the strength in the monthly to expect a monster move to the downside. So where does that put me here? What it puts me is the likelihood is we're going to pull back, but we could have pretty good support here at 3,800 again. I mean, we could have a little bit of noise coming down without really breaking down. So think about it in these terms. I mean, it looks like we could consolidate more without taking out this low or without taking out this high. Without, like, this is the high and low for last year. It's possible that we could spend at least 6 months here staying inside these two levels without breaking either one. And it is, I think, a possibility that we're going to spend the whole year as an inside year. Just the entire year stays in between these two lines. So kind of keep that in mind, and then go look for stocks that are independent movers. Stocks that I brought up on the show with Dave Keller yesterday. This looks nothing like the market. You want to be following stocks like that. Then this does have earnings, I should point out. But the point I'm making is that this chart doesn't look anything like the S&P chart. And I think if you stick with that, you're going to be a lot better off. The underlying universe looks a lot better than the indices do. Just be careful right now in terms of the juncture that we're at. We're at a really critical juncture right at the 18 months. So I would not be all that aggressive on the buy side until we get a little bit more of a resolution here over the next few days. All right. Have a good weekend, and we'll see you next time.